Hi everyone, welcome back to the channel. So in today's episode, we'll be running through two different things. First of all, it's TCI selling Microsoft. And second of all, we'll be covering some of the 13F filings as well, some of the stocks that have been falling, and just my general thoughts on them. Okay, so let's try and run through this. This is our Substack account. Feel free to check it out if you're interested. It's Helios Capital Partners, link in the description below. So I'll be covering TCI selling Microsoft first. So TCI, as we all know, is a fund that is focused on high quality companies. So they focus on companies that have the strongest possible moat. And TCI and Chris Hohn actually recently sold their Microsoft position. So they sold about, I think, 10% of the entire position. Now it's a 1% watcher position. So TCI sold Microsoft, highlighting two different reasons. First of all, they said they see Microsoft 365 suite as being at risk. And second of all, they think that Azure has some risk tied to it as well, because Azure is heavily concentrated in OpenAI and lacks backlog growth as compared to your other hyperscalers like Amazon as well as Google. So TCI reduced their stake in the companies from 10% to 1%, allocating the capital into your credit rating companies, Google as well as Visa probably. Okay, so I have my thoughts on this. Addressing the Azure business, they have concerns over the concentration and the rate of growth. So if you look at Microsoft in a recent quarter, if you were to go and look at the backlog growth itself, backlog only increased by 2%. So 2% quarter-on-quarter growth. And this is actually lagging behind your peers like Google as well as Amazon. So Google, I believe, had a monstrous growth in terms of your backlog. Amazon had decent growth as well, which was around 20%. So compounding this risk is the OpenAI concentration. So OpenAI currently makes up around 40% of the entire backlog of Microsoft. And that is probably one of the reasons why Chris Hohn actually sold his position. So Microsoft's management team directly addressed this backlog number during their earnings call. So they cited that they're actually pivoting their business model. So what they're actually doing right now is they're shifting from booking of future revenues, towards more of a pay-as-you-go model. So if you look at what Amazon has done over the years, this is what they've been doing. That's why the backlog isn't as substantial as a company like Google. Google is a company that is backlog focused. Amazon is not so much backlog focused. Microsoft is trying to transition that way as well. So you go from future revenue, deferred revenue, towards actual revenue coming in the business now. So meaning the company is getting enterprises to pay for subscriptions and layering on top of that a usage-based model. So Amazon are kings of this model. Management also mentioned constraints within data center equipment market, and that is why your capex actually increased. So as such, because of certain shortages, management has actually said that the company has been unable to tie enterprises towards long-term duration contracts because they simply don't have the supply to meet the demand. And that's why we only saw a 2% growth. And if you're to strip out the OpenAI numbers, management has said that it actually increased by 26% year on year. So while it is not as impressive as your peers in Google, for example, there's still a relatively respectable number, with Azure growing at 40% year on year. So if you look at the last quarter when Microsoft actually sold off, Azure grew at 39% and the stock sold off. This quarter as well, Azure grew at 40% and the stock still sold off. And besides that, if you're to look at whatever management actually said during the earnings call, they're actually highlighting for Azure to have slight acceleration into the back half of this year. And yeah, it's really impressive growth from the company. Okay, in the case of Microsoft 365 suite of products, this is how I would view the situation, as well as Chris Hohn's thesis. So his thesis has always been built on the fact that Microsoft has the ability to bundle all their products together. So he spoke about Zoom on the Norges Bank podcast. He spoke about how the company is able to bundle all their products, increase the value proposition, and basically provide more value to its customers without each of the individual product being as good as the competitors out there. So in his view, he clearly thinks that the bundling mode of the company is weakening with the emergence of AI. So this is my entire thought process. There are two different camps of Microsoft 365 products that are required. We'll call it the necessary as well as the discretionary. So in the necessary products, you have your Excel, you have your PowerPoint, partly, you have your Entra ID, which is for identification, you have Outlook, you have Microsoft Teams, you have SharePoint. All these are required in an enterprise. All these are required in your corporate offices. And then the risk that Chris Hohn is pricing in today is actually the discretionary part, which is maybe some slide decks, maybe some automation, maybe some writing of emails, some summarizing of your meeting notes. So he believes that AI will weaken Microsoft's bundling mode, which is why he sold out of his position. But I think Microsoft is actually trying to challenge this bear thesis out there by incorporating Copilot into its entire ecosystem, turning Copilot into a mandatory upgrade and a productivity boost rather than just a discretionary one. So Microsoft is actively incorporating Copilot to increase the value proposition. So in the case of Microsoft products, I think there are two different views that you can basically have. First of all is that enterprises will cancel their Microsoft bundle. Second of all is that enterprises will use the AI products that are already within the Microsoft ecosystem, although it's not the best, but they can use it to complement all the other products that they're already using. So I believe the latter is the cleaner version of the two. It's probably the more likely one. So if you're to add more nuance to this, let's say it's not between cancellation versus using. Let's say it's between using more versus using less and ARPU declining or seat dilution. So my view is that Microsoft's necessary products will strengthen enterprise renewal, providing Microsoft with an active base to basically upsell Copilot. Copilot is a plus $30 upsell on each bundle. So what that means is that if someone subscribes to Copilot, then they have to pay an additional 85%. So that more than makes up whatever they lose or the discretionary portions. So in a world where AI becomes increasingly commoditized, I believe is that the power lies in the distribution of the products. And in this case, Microsoft clearly has the distribution. They have 450 million users of their enterprise products. Okay, on top of this, AI agents are only useful when there's actual data that they can work on, because AI is currently still predictive in nature. It needs a set of data for it to infer from. And in the case of Microsoft, they already have the data embedded in your SharePoint, your Outlook, your OneNote. And if there's no data for your agents to work on, there's really no use cases for your AI agent. So for an external agent to work, your enterprises, they have to export the data out of Outlook and then use it on the third-party platform, which is number one, inefficient. Second of all, there are massive security as well as compliance hurdles as well. So Microsoft, on the other hand, already has the permission to use the data. So it is a data mode, it's a compliance mode, it's a sort of like a regulatory mode as well. So while AI may potentially reduce the need for individual applications, the key is whether or not Microsoft can own the orchestration layer above all the different workflows. So even with AI, enterprises will still require systems for identity, for permissions, compliance, collaboration, and data storage. Given Microsoft's position in Teams, in Outlook, in Entra ID, in Excel, the company is well positioned to incorporate AI directly into their products. This is my view. While Copilot sits as an orchestrator, basically controlling everything underneath of it. Orchestrator controls all the different softwares. So yeah, they are adopting a multi-model strategy. They have sort of like segregated themselves from OpenAI. I think this is a good move by the company because your enterprises are demanding more than just OpenAI models. They want the best models out there. So as inference costs decline over time through improvements in model efficiency, Microsoft may eventually benefit from operating leverage if Copilot achieves wide-scale and widespread enterprise adoption. So this is my view on Microsoft. A bit different from what Chris Hone thinks, and I'm still holding on to my Microsoft position. Okay, in the next portion, let's talk about some of the falling stocks as well as the 13F filings that have come out so far. Some interesting ones, some compounding machines, of course. First stock that I'll be talking about is Constellation Software as well as Topicus. So Topicus is another company I've spoken about previously. Constellation Software is a juggernaut. So Constellation Software as well as Topicus, they're great companies. They're currently trading at around 17 to 18 times price to free cash flow available to shareholders, with around 15 to 20% growth in terms of their free cash flow to shareholders. So Constellation Software, they just reported their earnings. So the normalized free cash flow grew at around 10%. If you were to normalize all the numbers, I know the headline is 44%, but they had a valuation change. While the cash deployed stood at 110% of free cash flow. I think this is a very interesting number here, which is that the company has been able to deploy so much of its cash while maintaining its supposed hurdle rate. So this is actually a positive for the company. It shows that your software sell-off is probably providing the company with opportunities, although the management has actually said that software valuations in the private markets haven't fallen too much yet. So they've said that valuation drops have been very minimal. So I think the way to think about Constellation Software as well as Topicus is as such. They own a lot of niche companies and they deploy the cash from all these different companies, and then it's sort of like a loop. So the compounding works as long as the majority of the companies are undisrupted. And second of all, the deal pipeline is still strong. Basically, they can deploy this cash at high rates of return, and that is sort of how you get the entire flywheel effect for a Constellation Software as well as Topicus. So currently, I think the key risk for the company, of course, besides AI, is the company's ability to deploy the cash at high rates of return. So investing in a company is basically a bet on the entire system working. I don't think there's much edge in insights because, yeah, there's a lot of things that are obscure. You can dig into the individual companies, but it's all qualitative assessments. You don't have actual tangible downside protection for these two companies. But I think you can stand to gain from sentiment shifts as well as valuations shift for these two companies. So they're growing at 15 to 20%, trading at 17 to 18 times price to free cash flow. I think it's a fairly reasonable valuation, but of course it's all built on qualitative assessments. So that is for you to go and decide. I think Monish Prabhai is quite invested in all these three companies. He has around 15% of his entire fund in the Topicus, Lumine, as well as Constellation Software. Next one, let's talk about S&P Global. So S&P Global was actually a company that was quite heavily bought by Pat Dorsey. Pat Dorsey is a super investor that is focused on qualitative aspects rather than the numbers, because the qualitative aspects are the ones that drive the numbers. That is his opinion. So he bought into S&P Global. It's around a 7.54% position. So for SPGI, it's another company that has been hit by the entire AI software debacle. So Claude recently released a legal plugin, and then the stock sold off 5% on the day itself. So for S&P Global, my thought process is as such. The company has a few different businesses that are disruptable. So your market intelligence is disruptable. You have your mobility as well, that business is being spun off. And then there are other very strong businesses that are probably not going to be disrupted by AI or any form. So for example, you have your commodity insights, you have your credit rating businesses, you have your indices businesses. Those three businesses are very strong and durable franchises, and they're not going to be disrupted. So commodity insights is sort of like a benchmark, indices as well. Credit rating is a standard, and none of these will be, in my view, be disrupted by AI. So each segment commands relatively strong pricing power and has secular tailwinds behind of it. So I think a way for you to think about all these different portions as well as S&P Global in general is to wait for the markets to completely discount away the market intelligence business. Basically offer it for free. And once you get to that point, I think there's asymmetrical upside for the company. S&P Global today is currently trading at, I believe, around 23 times price to free cash flow. 25 times price to earnings. So that's my thoughts on S&P Global. I think it's a quality business and I own it as well. Next one is Microsoft. Yeah, Microsoft is up 3% today. So despite Chris Hohn's selling position in Microsoft, Bill Ackman actually bought into Microsoft. So I think his thesis is similar to mine as well. So he said Microsoft operates two valuable franchises in its enterprise technology, which accounts for 70% of the company's overall profits, which is M365 as well as Azure. M365, the company's productivity suite, is the dominant operating platform for knowledge work with 450 workers. And then you have Azure, which is the second largest hyperscaler, with AWS and our Amazon investment, is a direct beneficiary of the multi-decade migration of enterprise IT workloads to the cloud. So both Microsoft 365 and Azure are underpinned by Microsoft's unparalleled enterprise distribution and the security, compliance, identity infrastructure it has built and refined over decades. Yeah, so it's exactly the same as what I've spoken earlier. Microsoft has a lot of different barriers besides its ability to bundle their products. So beyond these core franchises, Microsoft also owns a portfolio of other leading businesses, including LinkedIn, its gaming platform, and search and news advertising. So it's similar to my thesis on Microsoft. I think I've laid out my thoughts for Microsoft already. So I'll go on to the next and the last company in the entire 13F filings that I'll be talking about. So the last one is actually MasterCard as well as Visa. So Triple Front, this hedge fund is actually quite amazing. So they've been very concentrated into core positions that have done very well, compounding machine investing. They focus on qualitative aspects as well. And in this quarter, they bought a 9% position into MasterCard. So for MasterCard and Visa, they've been hammered over the past few months. So I believe they're down around 10% year to date. So in my view, the markets are underpricing two different things. First of all is the durability of the businesses. And second of all is the respective value-added services businesses. So if you look at Visa, for example, their value-added services grew by around 27%, which I think a lot of sell sides are not pricing in today. They're still pricing in payment volumes and transaction volumes, all that. And while the markets continue chasing your semiconductor stocks, they have left behind some of these high-quality businesses, Visa and Microsoft included. They are currently trading at 10-year low valuations. So again, in large caps, while it may be tough to have actual insights, I think valuation and sentiment plays can give you sort of like an edge and generate alpha as well. And in terms of these two businesses, Visa as well as MasterCard, I think they're compelling today. I have a Visa write-up if you guys are interested. It's in the Substack as well. I hope you guys have found this video useful, and I'll see you soon.